In our last video, we found out why the Forex market has become more unpredictable than ever. But now comes the real question. How do you actually trade in this chaos? All strategies are failing, support and resistance levels aren't holding, economic data is triggering wild swings, and liquidity vanishes just when you need it the most. So how do you make smart decisions when nothing behaves the way it used to? Well, here's the truth. Forex is still Forex, but the rules have changed. And when the rules change, the only way to win is to adapt. Traders who refuse to adjust keep getting stopped out until the market forces them out. But those who learn to navigate this new reality don't just survive, they profit off the same volatility that's wiping out others. Think about how you used to trade. You'd mark a support or resistance level, wait for the price to hit it, and then make your move. But lately, that approach just isn't working. That's because the market doesn't just react to those levels anymore. It hunts the liquidity behind them first, then decides its real direction. So when price breaks a key level, don't just rush in. Watch how it reacts. If it quickly snaps back inside the level, that could mean liquidity has been absorbed, signaling a possible reversal. Also, use volume to check if the breakout is real or just a trap designed to trigger stop losses. And stop relying on static price zones. Focus on tracking liquidity instead. The biggest players aren't reacting to price, they're controlling it. If you don't understand how liquidity moves, you're just another easy target in this market. And it is not just liquidity that has changed. Economic data no longer moves the market the way it used to. There was a time when strong US job numbers meant a stronger dollar and weak data meant a weaker one. Simple, right? Well, not anymore. Now good data can actually send the dollar lower, while bad data can cause a sudden rally. That's because markets don't just react to the numbers, they react to expectations. By the time a report is released, big money might already be taking profits or shifting direction. So how do you trade news in such an environment? First, check how the market is moving before the release. If price has already made a big move, the data might be priced in. If the report is way above or below expectations, brace for a sharp reaction. But if it is exactly as you expected, the market might barely move at all. And never trade based on one data point alone. Combine multiple indicators to get a clearer picture of what is really happening. The key isn't just reacting to news, it is anticipating how the market will digest it. And in a high volatility market like this, risk management is no longer optional, it is essential. If you're still placing stop losses the way you did last year, you're probably in trouble. Tight stops are getting hit more than ever, and without proper risk control, a single trade can take you out of the game. So how do you adjust? First of all, stop placing stops at obvious levels. Big players know exactly where retail traders put them. Instead, set them beyond liquidity zones, where price is less likely to whip back and take you out. Use dynamic stop losses, adjusting them based on volatility with indicators like ATR. And lower your position size. With price swings getting wilder, giving your trades more breathing room is more important than ever. In this market, success isn't about chasing big wins. It is about avoiding unnecessary losses. And that brings us to timing. Not all trading hours are created equal. There was a time when you could enter the market at virtually any point and still find solid setups. Not so anymore. Now entering at the wrong time can actually kill your edge completely. The best trading opportunities come during the London-New York overlap. This is when liquidity is highest and price action is strongest. Right before the New York Open, you often see a setup phase where price establishes direction before making a move. On the other hand, trading during the Asian session can be somewhat risky. Low liquidity leads to erratic price swings and unpredictable moves. In a market like this, where your trade is just as important as what you trade. The bottom line, if the market has changed, you need to change with it. So get sharp at analyzing central bank moves, master liquidity dynamics, take risk management seriously, and accept that no level is guaranteed to hold anymore. Forex still rewards those who know how to play the game. But if you're stuck in the old habits that you used before, this market won't hesitate to push you out. Now it is your turn. What is the #1 skill every trader needs to survive in today's market, in your opinion? Share your experience in the comments and help other traders avoid costly mistakes. Until next time, good luck and happy trading.